It hasn't yet lived up to the original purpose, which was to be a peer-to-peer money. We treat it like a store of value, but the innovators, the developers on the Bitcoin blockchain are working very hard to increase the throughput, the speed, and eventually turn Bitcoin into a money. So, Brett, we think that all the world's monies will be digitalized because when you have one and it's software, the thing we know about software is you can copy it as many times as you want. So if you've got one working global native internet money, Bitcoin, you can have as many as you want. You can have digital dollars, digital yuans, digital new X, Y, and Z. And then the question is, how many will the world need when the dust settles? And the answer is, we probably don't need an infinite number. We only need a defined number. And I think we'll have a digital dollar.
Welcome to the Build to Billions podcast, where we guide successful entrepreneurs and investors on their journey from millions to billions. We believe the key to scaling and compounding your wealth and life starts every single day with a mindset and practice of stewardship over ownership and applying billionaire biblical principles. Our ultimate goal is to help you scale and compound your wealth in life so you can give more all for the way to help MVPs. My name is Brett Swartz. Each and every episode, we're joined by the world's top entrepreneurs, millionaires, or billionaires, and they share their secrets, insights, and wisdom with us so we can gain more leverage, more impact, and more momentum. I'm excited about our next guest. I think originally from the UK. Now he's residing mostly in the San Francisco Bay Area, and he's going to teach us a little bit about how to invest into AI and blockchain. He's got a really unique company and a really unique background. He's the CEO and managing partner of Fifth Era, including blockchain. And Fifth Era is a specialized asset manager providing access to exceptional technologies that are transforming the world. Fifth Era specializes in investment strategies which construct portfolios of hard to access funds in direct investments with an emphasis on AI and blockchain. And their strategies are now in the 10th year and are backed by 400 plus investors globally, and so much more. Please welcome to the show with me, Matthew Lamothe. Matthew, how did I do on the last name pronunciation?
That's fine, Brett. Thank you very much. Good to be here.
For our listeners, get to know you for the first time. Would you give us just a little bit more about your story and your current focus?
Yeah, I'm happy to, Brett. Let me start with today. Today, I am managing partner of Fifth Era, and within that, we have blockchain co-investors. We are, as you just mentioned, venture capitalists focused on early stage direct investing, as well as mid and late stage for emerging unicorns of the blockchain and AI space. And this is something we've been doing for 15 or so years. We're fortunate to be investors in about 80 unicorns, most of which we got exposure to in the early stage through the strategies you and I will talk about. But my journey began, as you pointed out, in the UK. Started off with McKinsey and Consulting in London, got sent to America alongside the person that became my wife later, Alison Davis. We went to Stanford, got our MBAs, decided to stay on for a little while, and a little while became the rest of our lives here in California and in the US. Alison became CFO of BGI, which is now BlackRock, the world's largest asset manager, became a private equity investor. I became a venture capital investor, and our focus was internet, fintech, and digital content, which obviously, for those of you who are familiar, you know that those have morphed over time into being advanced computing, AI, and blockchain and digital finance. So that's what we invest in today, but we've been investing in similar spaces for a long, long time.
Excellent. So let's just dive into the topic at hand, which is investing in AI and blockchain. What would you say is the number one key principle when you're looking at investing into AI and blockchain?
Yes. So for us, these are areas that are ubiquitous and inevitable. And as a venture investor, any venture investor, what you're looking for are innovations and technologies that you believe the entire world or a large portion of the world is going to be using in the future. It's often very hard to be sure about, when that will happen. Will it be a 5-year, 10-year, 20-year migration. But if you're confident that the new technologies and innovations will eventually be used, you're already in a position to place some capital against inevitable future and strong tailwinds. And for us, the moment that we could see that blockchain was going to enable all the world's monies, commodities, and assets to be digitalized, and they were going to open up a world of real-time, frictionless, low-cost finance, we went all in on blockchain. In the case of AI, we've known for 30 and 40 years that advanced computing, big data analytics, um, one-to-one marketing based upon algorithms, these things were coming. But obviously, in the last 3 to 5 years, we've seen an inflection point where AI has suddenly become something the whole world can use. It's sort of like a UI UX upgrade. And for us, that is a relatively newer focus area for our funds, which we'll talk about. AI for us is now absolutely inevitable.
Okay, excellent. That makes sense. So one of the key principles is the inevitability of worldwide adoption of the tech and of the business model behind AI and blockchain, and understanding that makes sense. What's the number two kind of key principle to investing into AI and blockchain?
Yes. So it does depend a little bit, Brett, on who we're speaking with, who the audience is, because the answer to some of these questions will vary depending upon who we're speaking with. I think the first one is to know and have a thesis, an investment thesis for any area that you choose to focus on, if it's venture focused. So mostly, let me just clarify what I'm talking about is the area of new to the world technology enabled innovation or exponential technologies that are changing the world. So what I'm about to say may not be relevant to other asset classes and other areas of investment. In this world of Silicon Valley venture capital, if you will, the first thing is to have a very clear investment thesis and a point of view on where we're heading. We already talked about that. The second is to be absolutely confident that the tailwinds are going to outblow the headwinds. And the headwinds include things like government regulation or legacy solutions and large enterprises that may resist change and resist the arrival of new technology. It can include consumer behavior and whether or not consumers are willing to embrace different ways of doing things. So there's a bucket of stuff, that's that second group, which is trying to figure out, are the tailwinds stronger than the headwinds? The third thing, so I'll just keep going. The third thing, Brett, is you've got to have unique access. These innovation is very concentrated. A small number of the best entrepreneurs with the best projects and companies tend to capture most of the opportunity over time. And it always begins with thousands or tens of thousands of people trying, but a small number will emerge. And there's two ways to try and gain access to, if you will, a better than normal set of opportunities. One is to go out and seek the best entrepreneurs. The second is to try and get very close to the best investors in a specific area. And we chose the latter strategy, which we can talk more about in a moment. And then the fourth thing is signals and asymmetrical information. The failure rate is very, very high in venture. So even for the world's best venture capitalists, they're going to lose 2/3 of the money they invest in terms of the number of investments they make. 25% of the time, their projects may get to a 1x to 5x, and only 10% of the time will they get to 10x, 5x or better. But it's that 10% that return the fund and create a very high expected average return. And so you're looking for the signals that will give you confidence that a particular company or project is an emerging category leader and more likely to be one of the winners. And that's when you put more capital in. So I think I've said four things. You know,
You
And
said great things there. And by the way, if you want to know more about Matthew, you can go and learn by going to fifthera.com, fifthera.com. They specialize in asset manager, providing access to exponential technology that's transforming the world. And they specialize in investment strategy with construct portfolios that are hard to access funds and direct investments. Okay, so you covered a lot there, right? And I think just in kind of a maybe just summary, have investment thesis, right? Have a clear investment thesis. Very, and be clear on that. Make sure that the tailwinds will, as best as you can, or you're confident that they will outblow the headwinds, because there's always headwinds, and so beware of that. And then having the unique access to these opportunities, and what you guys focus on is getting close to the best investors in a certain area. And then realize that, hey, failure rate is 2/3, right? But for the 10% or that can 5x and better, that's really where it comes back. Is that a fair summary so far?
it's very good, Brett. Thank you. And I did say at the outset, the audience matters, because just the nature of mathematics is what we just went through was averages, but there are distributions around the averages. So the danger is because of how venture statistics are, it is possible for you to be fishing in the right pond and still lose all your money. And conversely, you'll see some people, the world's best venture capitalists, have a little bit more than a 10% 5x or better, and their return becomes very, very attractive, especially in the early stage. So, if you're a person that can't risk total loss of capital, then this may not be a good place to play at all. And there are some strategies to, if you will, de-risk and increase diversification and so on, which we'll talk about, I'm sure, Brett. But this isn't for everyone, and people need to gauge their own personal risk return criteria. And Brett, you and I didn't say, but nothing we're saying on this webinar should be taken as investment advice. It's all educational in nature.
Absolutely. Yeah, just higher level macro, strategy here. But yeah, nothing's to be taken as tax or legal advice. So, okay, very good. Thank you for sharing that. Maybe what haven't I asked you so far about what you guys do that could be helpful for the audience who are listening in?
Well, we're more than happy to, we're very transparent. So people can go to the website and they can read our investment thesis. We've actually written books that you can get on Amazon and Apple on both the Fifth Era and on blockchain. And we try and be very transparent. We think that most investors have no exposure to innovation and technology to speak of at all. They have public equities where they may get a little bit of tech exposure through the Amazons and Nvidias, perhaps. They have a lot of fixed income and some real estate, and many people have no venture exposure at all. And then, as far as we're concerned, they're missing the future altogether, essentially, and they're probably missing the highest returning asset classes, along with small cap real estate and a couple of other very hard to access asset classes with potentially very high returns, but lots of risk. On the investment strategist perspective, we're also transparent. So Brett, I'm happy to tell everyone what we do, and they can try and do it by themselves. I don't want to try and pretend that we have some secret sauce others couldn't replicate, but it's just a lot of work. So what we do, Brett, is in the early stage, we follow a strategy of invest with the best investors and get broad diversification globally in blockchain and AI. And the way we actually do that is we operate fund of funds. So we raise capital, we have a fund of funds. The fund of funds picks 10 to 15 of the best VCs that we built relationships with, and we put our capital into their vehicles, and we hope that they will get exceptionally good results and that will pass back through to us. So that's our early stage strategy. And we chose that strategy because when we looked at the internet in the 90s, in hindsight, it was pretty clear that you knew who the internet firms were. Certainly by 95, 96, they had names like Kleiner Perkins and NEA and Andreessen and Sequoia. And if you'd been in their funds of that vintage, the early internet vintages, they were outstanding, exceptional funds. The second reason we chose that strategy, however, is it gives us the other two things I described, access and signals or asymmetrical information, because we then today we are an investor in 60 or so blockchain funds and a group of AI funds, and they report to us every quarter. So we know their investment strategies, new investments, up rounds, down rounds, follow-ons, exits, failures, and that informs our mid and late stage direct investing.
Okay.
So rather than me read the newspaper and try and figure out what's going on, I'm actually getting the world's best venture capitalists in these areas telling me, we really think the emerging, winner in custody or exchanges or in, agentic solutions is X, Y, and Z. And that is very valuable information if you're going to do mid and late stage investing.
Okay, got it. Okay, so you guys have a fund model. I imagine it's accredited investors, I would think, right? Maybe you tell me one way or the other on that. And is there a minimum investment, and how long has the fund been open for?
Yes, so some of this information I can't share, Brett, on a public
Okay.
webinar because I don't quite know who the audience is.
Okay.
Anyone who reaches out to us, I can answer all of these questions, but broadly speaking, yes, you have to be an accredited or better, in fact, qualified client is a California definition, and qualified client is our requirement. But I can't give you the fund specifics on a public webinar, which is
No
things
problem.
like costs and minimums and
Yeah,
things
no
like that.
problem. That's
Yeah,
fine. Yeah, you want to learn more, everybody, you can go to their website, which is fifthera.com, fifthera.com. Matthew, what is the fifth era, and what was the fourth era?
Thanks for asking, Brett. And there's a book that Alice and I wrote about this. It's our view that we're entering a new phase of human existence, unlike anything that's gone before. And we wrote all of this down 10 years ago and more. It's not a continuation of the industrial era. So you'll hear people say we're entering the fourth industrial revolution. We disagree. We don't think this is a continuation of the industrial era. The industrial era was characterized by things like large corporations where you go and work 40 hours a week in a place of work where you've got a desk and you've got a boss and you do defined work. And there are economies of scale and scope based upon geography and so on and so on. We think that time is coming to an end. And so the fourth eras are, the hunter-gatherer period, the agrarian period, the mercantile period, the industrial period, and now we're entering something new, a fifth era in which advanced computing and digitalization of everything humans do is going to enable us to do things in a completely different way. And I'll just give you one example that makes the point. Everything I learned as a venture capitalist in the old days said we should back companies that try and build a product or service in a local setting, get product market fit, and then try and expand. Well, today that isn't the right strategy. Today, you can start from day one with the access that the internet and digitalization provides. With the access that digitalization and the internet provide, a startup can serve the world from day one. And that is not an industrial era mindset. It used to be design local and then expand over time to be regional and maybe one day global. Today, the right answer for many tech businesses is designed to be global from day one and see and figure out where you resonate first. And it could be that your US team, but you're getting a lot of traction in Korea, or a lot of traction in Venezuela, or a lot of traction in Africa, and that's okay. I mean, product market fit may not be local first anymore. So that's an example, but there are other examples.
Yeah.
So that's the fifth era. The fifth era is a digitally enabled global economy in which the economies of scale and scope no longer really apply. and everything humans do and every industry and business are being transformed as a result.
Got it. Let's talk about Bitcoin. So, what is your thesis on Bitcoin, and maybe some myths that you think are kind of just, not realistic, and or what do you think is the future of it?
Thanks, Brett. Well, so it actually continues from what we just said, because in order to have a global digital economy, it can't just be that you communicate and share information in real time at no cost around the world, but then you have to go off and transact through legacy financial infrastructure that might take a week to close out the transaction or longer. You buy a piece of real estate, it might take 45, 60 days to close out the financial transaction, even though you've already signed that you're going to buy the property. So digital finance and natively digital money is way at the top of the priority list in order to achieve this vision that I'm describing. And it's inevitable as well, because we did spend the last 20, 30 years digitalizing communications and content, and we pretty much have done that. It's getting better, but we still have done most of it. So the digitalization of value and finance is way at the top of the priority list. And when Alison saw Bitcoin 12, 13 years ago, several light bulbs went on. The first was she was on the boards at the time of Fiserv and had previously been on the First Data Board. These are basically amongst the world's leading payment and merchant acquiring businesses. And so she knew that the holy grail of their businesses was real-time internet-based money. And we didn't have it. And Satoshi Nakamoto had written a white paper to create a peer-to-peer cash. That's what it's not called Bitcoin. It was called peer-to-peer cash, so that it could work over the internet. That's the white paper. Bitcoin was the name of the invention, and it works. So, regardless of what you think about it, it is a first natively digital money that reliably and securely enables the movement of value across the internet. It hasn't yet lived up to the original purpose, which was to be a peer-to-peer money. We treat it like a store of value, but the innovators, the developers on the Bitcoin blockchain are working very hard to increase the throughput, the speed, and eventually turn Bitcoin into a money. So, Brett, we think that all the world's monies will be digitalized, because when you have one and it's software, the thing we know about software is you can copy it as many times as you want. So if you've got one working global native internet money, Bitcoin, you can have as many as you want. You can have digital dollars, digital yuans, digital new X, Y, and Z. And then the question is, how many will the world need when the dust settles? And the answer is, we probably don't need an infinite number. We only need a defined number. And I think we'll have a digital dollar. That's right now Tether and Circle. We'll have stable coins. We'll have a digital yuan, a digital yen, a digital euro. And somewhere in there, there'll be a small number of non-sovereign, non-central bank monies. And right now, the leader is Bitcoin. So if Bitcoin can hold its position in the mix, it should be worth a lot more in the future than it is today. But that's not guaranteed. Bitcoin could be made obsolete in some way. And then, of course, like all in monies, it may depreciate in value if no one needs to use it anymore. And we've seen that in money continuously. Conch shells and painted beads are no longer viewed as valuable money, but once they were very, very valuable. Some people love silver and gold. We don't really use it as a money anymore. You don't walk into Starbucks and say, here's a gold coin. I'd love to have, whatever that would be, 1,000 coffees. And they're not going to change your gold coin, even if it's strictly speaking still legitimate money. Its face value is not $4,000 or $5,000. It's going to be, $10, you're not going to give up a gold coin for so Starbucks says it's worth $10. So,
Got it.
you know, so I
Got it.
went a long way down that path. But Brett, I wanted to make sure the audience understands that Bitcoin is the world's first natively digital money. All the world's monies are going to be digitalized over time. And the question is, do you believe that Bitcoin has a place in the mix when the dust settles and we get the equivalent of the browser wars or the mobile protocol wars? We're going to have the digital money wars in the future, and only a small number of them will survive. And I'm inclined to say, yes, I believe Bitcoin will be one of the handful that makes it through the end of the sausage machine, but nothing's guaranteed.
Excellent. I speak with Matthew Lemerle, but I'm going to spell it for you: Lemerle with Fifth Era. Fifth Era, and you can go and learn more about Fifth Era at fifthera.com about ways to invest into these types of technologies, AI and blockchain, and it could, of course, include some Bitcoin investing with different technologies that are using it. It appears to be. So check it out. Go to fifthera.com. Excellent. I want to shift a little gears here, Matthew. So. We focus on a thing called capital gains tax solutions when people are exiting large businesses, Bitcoin, tech companies, and they're facing 20 to 50% of their capital, their equity getting crushed by tax, especially in places like California. I told you, I grew up there. I always love it, but a lot of tax there, right? So when people sell, we build plans to defer the tax to be able to invest into other things. Like, for example, we did a $13 million deal in San Diego, and we invested a lot of it into Bitcoin. And about $40,000 a coin, we got it, diversified, all tax deferred, the way that we structure it. So I'm curious, as an entrepreneur like yourself, in exits, what have you found to be any good strategies for exiting public or private stock or Bitcoin or business exits, real estate? What do you find there?
Yes, so Brett, I understand exactly what you do, not necessarily the exact tactics you use, but I understand what you do. And one of the things we put into the first book Alice and I wrote, which is called Build Your Fortune in the Fifth Era, was that we looked at all the world's wealthiest people and we asked the question, where did that wealth come from? And a disproportionate number of those very, very wealthy people, it's because they were technologists and innovators. And those are the ones whose names you know: Sergey Brin and Larry Page, Mark Zuckerberg, Elon Musk, Jeff Bezos, and I could keep Larry Ellison. These are all technologists and innovators. What you don't necessarily see is that there are a very large number of recent very wealthy people who have gained their wealth from backing the innovations that we focus on, AI and blockchain. And those people's names may not be so well known. Some of them purposefully are keeping out of the limelight. And when you look at a Fortune or a Bloomberg or whatever list of billionaires, they may not even show. But that doesn't mean that they're not 100 millionaires and billionaires. It's just they're choosing not to put up their hands. It's sort of a private matter between them and the IRS or their equivalent in their own countries. But you would be shocked at how many there are. Here in California and in the Bay Area, we now have maybe the largest number of billionaires in the world alongside New York, and the largest number of 100 millionaires in the world alongside New York. But I actually think we have a lot more, because when I look at the lists, I can see lots of people who are missing, who we know because we invested in A, B, or C opportunity or company. And there's a lot more coming, because obviously the ChatGPTs and the Anthropics and Perplexities and so on, they haven't yet gone public. So even if they are paper wealth, they're not yet liquid wealth. So those capital gains related moments for most of these people are in the future. They haven't yet realized their gains. They haven't yet been forced to, exercise their options in a going public event or in an acquisition. But I do think that they need to think very thoughtfully and carefully about pre-planning. And that can mean all sorts of things: borrowing against their shares, doing the strategies that obviously your firm specializes in. For the people in the audience listening now, probably very few of them are in that fortunate category. Maybe a few are. But the so what I want to leave them with is, if you've got no exposure to the technologies and innovations that are unleashing all of this wealth, then as an investor, I don't think you've done your homework. It's sort of like, it'd be like if all your wealth's in Philadelphia cream cheese and General Motors combustion engines, you're missing the whole point, right? Which is where technology enabling the world and the values being unlocked by those companies. It's why NVIDIA, if you look at the trillion-dollar companies, another way of thinking about it, all the trillion-dollar companies, with the exception maybe of Saudi Aramco, they're all technology companies. And you could have invested in any one of them 10 or 15 years ago at a much lower valuation than they have today. Frankly, you could have gone into Google a year ago and you doubled your money. NVIDIA 2 years ago, et cetera, et cetera. So hindsight, it's easy to say all of these things. But if you're not fishing in the right pond, you're never going to catch the right fish. And I'm always shocked by how many investors have no exposure to innovation and exponential technology. And then for you, Brett, I'm sure, I don't know this for sure, but I'm guessing that the lion's share of your clients are probably the entrepreneurs who built those technologies and the investors that backed them in the early stage.
Yeah, so much wisdom there. Wow, I absolutely love that. And yeah, by the way, you don't want that fish that you caught to be cut in half by the IRS when you sell, or you have to do the margin against it, and there's a margin call. So there's a time to exit, or stuff places like the WeWork, right, where you're a part of it, and obviously the WeWork goes the other way. And so diversification and selling wisely, and I love the way you put it, Matthew. The pre-planning, right? The pre-planning is so, you be thoughtful and careful about the pre-planning because it's so important. So we want you to not only build the technology, build the investments, we want you to build a capital gains tax exit plan so you can land the plane in a safe manner without getting crushed by tax. Go to capitalgainstaxsolutions.com if anyone wants to learn more about how to do that for businesses, Bitcoin, real estate, and large exits, okay? capitalgainstaxsolutions.com. Matthew, we're way over time. Are you ready for the lightning round?
Sure.
All right. Knowing what you know now, if you could go back to your 20-year-old self, what's the one golden nugget you'd make sure to tell yourself to do?
I would have become an investor faster, even if I had had limited resources. My first 30 years, I was a consultant, and I didn't become an investor until well into my 40s.
Excellent. Question number 2, number 1 book you've recommended in the past year?
Ooh, that's a tough one. I use books to escape and get into fantasy worlds. And so I don't read a lot of business books anymore. I tend to do podcasts like this and I listen. But when it comes to a book, it's normally escapism. And so I'm going to actually say it's almost certainly a fantasy novel of some description. But there's been a lot this last year, so I don't want to name one.
Okay, that's all right. Great. Question number 3, what are you most curious about?
I'm curious about the future. I feel like we're scared of the future, but in fact, I think we are living in the world the best time that humans have ever lived in, and we tend to miss the wood for the trees. In most respects, human life is getting better, healthier. We're living longer lives. We have more resources, more information, and we tend to miss that because we read the newspapers and they constantly try and push our heads into negative stuff. You started this webinar, Brett, with mindset, and I think I'm most excited about a future mindset that imagines how wonderful the future can be. And when you get into that mindset, you start seeing things that other people aren't seeing, and those become oftentimes great investment opportunities. If you have a negative, fearful mindset, you're just going to put all your money into Philadelphia cream cheese, and you know where that's going to go.
Yeah, you may have a good bagel or two, but it's probably not very well of upside after that. So I love it. I love it. really the last question, we'll wrap it up because we're over time, Matthew. And it's really this kind of the concept of having a mindset and practice of stewardship over ownership, believing that everything we've been given is a gift. I believe it's a gift from God. He's given us to be a blessing and help to others, change the world, make a huge impact. So how do you best keep a mindset and practice of stewardship over ownership?
You couldn't have said it better. So I agree with you, Brett. I mean, that's Alison and my mindset too. Rather than answer the question, I just want to echo what you said. We're all fortunate, and everything we have, we are temporary stewards of, and we should appreciate that, make the most of it, use it to do good things, and when we leave this mortal coil, we will have left a legacy that humanity is better positioned with more than when we came in. And that would be the best possible outcome of all of our efforts. And that could be true for our children, but it could be true for everyone else's children as well.
Amazing. Matthew Lamole, I want to just thank you for being on the show. I want to thank you for sharing your deep wisdom, insight, your principles with us, and giving us insight on how to invest into AI and blockchain, and starting your company and working with your team to provide accredited investors the opportunity to invest in these early stage opportunities that are changing the world, the technology that's changing the world. And keep using your gifts, keep blessing more people. For our listeners who want to get in touch with you, one last time, what's the best place for them to find you?
It's just, we're very transparent. Just go to fifthera.com, and not only will you learn about us, but all our contact details are at that location as well.
Perfect. Thank you, Matthew. And also I want to thank all of our listeners, you out there who are listening or watching us on YouTube for the Build Into Billions podcast, also streaming on Capital Gains Tax Solutions podcast and YouTube channels. Hey, we're on this journey with you to scale from millions to billions so we can give more all the way to help MVPs. I want to encourage you to take action today. If you haven't diversified into early stage opportunities, why not consider it with groups like Matthew's team at Fifth Era, and by going to fifthera.com. And of course, if you have a large exit Bitcoin business, real estate, and stock, and it's multiple millions of gains, go to capitalgainstaxsolutions.com to get started to build a capital gains tax exit plan. Appreciate you listening or watching out there. Please share this with someone, and we'll talk to you soon. Bye now.